first £1,000 is sitting there right now, and honestly, it's probably giving you anxiety. Should you save it? Should you invest it? Should you pretend it doesn't exist until you figure out what adults actually do with money? Here's what nobody tells you about that first grand. It's not just money anymore, it's a test of whether you understand the difference between playing it safe and playing it smart. And most people fail this test disgustingly. I'm about to show you exactly what to do with your first £1,000. But more importantly, I'm going to tell you what I actually did with mine, because the textbook answer and the real world answer are two completely different beasts. See, your first £1,000 is like standing at a crossroads. One path leads to slow, steady, boring wealth building. The other path leads to potentially changing your entire financial trajectory in the next 12 months. Most people take the first path because it feels safe. But safe doesn't pay the bills when inflation is eating your purchasing power for breakfast. Let me tell you a story. When I had my first real chunk of money, I did something that financial advisors would probably call reckless. I spent almost all of it learning from someone who was already making the kind of money I wanted to make. Not reading books about it, not watching free YouTube videos about it, actually paying someone to teach me their exact system. That decision changed everything. But before I tell you why, let me give you the standard advice first, because for some of you, it might actually be the right move. The traditional wisdom says split your money into buckets: emergency fund, investment account, maybe a little speculation money. This isn't wrong, it's just incomplete, because it assumes your biggest problem is protecting money you already have, when your real problem is probably that you don't make enough money in the first place. Here's the thing about emergency funds. They're psychological safety blankets. They make you feel secure, but they don't make you wealthy. And while you're sitting there with your 3 months of expenses saved up, inflation is quietly stealing your purchasing power, and opportunities are passing you by because you're too scared to take calculated risks. Now, I'm not saying emergency funds are useless, but if you're young, if you have time, if you have energy, if you're hungry for change, then maybe, just maybe, your first £1,000 should be working a lot harder than earning 2% in a savings account. So what did I actually do? I invested in myself. Specifically, I invested in learning high income skills, skills that could generate money on demand, skills that could replace my day job income in months, not decades. I learned about property deal sourcing, finding profitable property opportunities and selling them to investors for 4-figure fees. I learned trading strategies that actually work, not the get-rich-quick nonsense you see on social media. I learned about building systems that could generate income while I sleep. But here's the crucial part. I didn't just buy a course and hope for the best. I bought access to someone who was already doing what I wanted to do. Someone who could show me their exact processes, their mistakes, their shortcuts. Someone who could compress years of trial and error into weeks of focused learning. This approach comes with a massive caveat. When you bet on yourself like this, you can't half commit. You can't buy the course and then make excuses about why you didn't implement it. You can't blame the system when you don't put in the work. You have to execute like your financial future depends on it, because it does. The beautiful thing about investing in skills is that they multiply. Money in a savings account grows linearly, but skills compound exponentially. Learn how to generate £1,000 from a skill, and suddenly you can generate 10,000. Learn how to generate 10,000 and 100,000 becomes possible. Most people protect money they don't know how to make again. They're so focused on not losing what they have that they never learn how to create more. But what if instead of protecting your first £1,000, you used it to learn how to make your next 10,000? There's a psychological shift that happens when you stop thinking about money as something scarce that needs protecting and start thinking about it as something abundant that can be created. Once you have skills that can generate income on demand, traditional investing becomes a luxury, not a necessity. Now, I know what some of you are thinking. This sounds risky, and you're right, it is. But here's what's actually risky: staying exactly where you are. Inflation eating your purchasing power. Technology potentially making your current job obsolete. Playing it safe in a world that rewards people who take intelligent risks. The question isn't whether you should take risks with your money. The question is what kind of risks you should take. Should you risk it on stocks you don't understand, managed by people you've never met, in companies you know nothing about? Or should you risk it on yourself, on your ability to learn and implement and execute? I chose to bet on myself. That bet paid off in ways I couldn't have imagined when I started. But it required me to stop thinking like someone who was trying to protect what little I had and start thinking like someone who was serious about creating abundance. Your first £1,000 isn't really about the money. It never was. £1,000 won't change your life on its own. It won't free you, but it will expose how you think, because that first 1,000 forces a decision most people avoid for decades. Do you become someone who manages money or someone who creates it? Do you spend the next 40 years playing defense, budgeting, preserving, cutting back? Or do you learn to play offense while time is still on your side? Most people are trained to play defense. Save what you earn, avoid risk, protect what you have. And it sounds responsible, but defense has no finish line. You can always optimize more, always protect harder, always wait a little longer. Meanwhile, prices rise, energy fades, time disappears. So here's my challenge to you. Take that £1,000 and stop asking how to protect it. Stop asking where it's safest. Stop asking what guarantees you won't lose it. Stop treating it like it's fragile. That mindset, protecting before you can create, is exactly what keeps people stuck. Instead, ask a different question. How do I multiply myself? Not the money, you. How do you use £1,000 to increase your earning capacity, your leverage, your optionality? At this stage, chasing guaranteed returns is a mistake. Guaranteed returns are for people who already have capital. In the beginning, the real return is learning. Learning how money actually moves, learning how deals are structured, learning how cash flow is created instead of earned. Skills compound faster than savings ever will. Once you know how to generate £1,000, you stop fearing the loss of it because you know you can recreate it. This is why playing it safe is dangerous. Safe feels responsible, but safe often just means unchallenged. Safe is staying in the same income bracket with better excuses. Safe is waiting for permission. Do not play it safe. Play intelligent. Calculated risk, survivable downside. Upside that actually changes your trajectory, because the biggest risk isn't losing your first £1,000. You can recover from that. The biggest risk is waking up 5 years from now in the same routine, with slightly more money in the bank and significantly less time to change direction. Time doesn't warn you when it's leaving, it just goes. So this moment matters, not because of the amount, but because of the direction you choose. If you're done playing defense with money, watch the next video. From £0 to £10,000 a month, the realistic escape the matrix game plan. That's where clarity turns into momentum. That's where the rules change.